Hello and welcome to the look ahead for Thursday, the 18th of January, with me, Fiona Cincotta, Senior Market Analyst at City Index. So earnings season continues in the US. The major banks have they have reported, and now we're looking at regional banks. So tomorrow we've got FMB. Also separately, Taiwan Semiconductor is also reporting. As far as the economic calendar is concerned, first up will be Australian unemployment data, which is expected to show that unemployment remained steady at 3.9%. And the market's going to be looking for signs of weakness in the labour market for confirmation, really, that the Reserve Bank of Australia could be on track to cut rates, but with the next move that it makes. Although, as we'll talk about later in this session, there is very much this sense that markets are starting to reprice rate cut expectations, part of which is driving the Federal Reserve, the US dollar higher. But as I said, Australia unemployment expected. Now, we have seen a big move today in the Aussie US dollar, and that's on the back of the weaker data that we had in from China. China's GDP came in weaker than expected for 2023 at 5.2%, below the 5.3% that was forecast. Now, that's really raising concerns over the outlook for the world's second largest economy. That's had a big hit on the Aussie US dollar, China being Australia's largest trading partner. Now, just having a look at the chart here, we can see there's been a really quite an aggressive sell-off. We've taken out that support, which is the falling trend line, which dates back to the start of the year. We've taken out as well the 200 SMA, and now we're just testing the levels there. I've got 0.6562. That's going to be the level to watch, which is the early November high. If we get a break below that, then look out for 0.65 and 0.6460. That is the May 2023 low. On the upside, any sort of recovery in this pair is going to need to take out that falling trend line support there, and that'll be around the 0.6615 level. So just having a look back at the economic calendar, also expecting Japanese industrial output, which is expected to fall month on month 0.9% versus 1.3%. Now, we have seen data coming in from Japan even has been a little bit weaker than expected. We've seen, inflation's cooling. We've seen wage growth has been weak, and we've also seen that household spending is falling. So it's not really creating that inflationary environment that the Bank of Japan is looking for in order to take interest rates out of that negative and out of negative rates where they are right now. Now, if we have a look here, this is the US dollar, Japanese yen. This really does show well as the weakness in the yen, the recent strength that we've seen in the US dollar as markets sort of, rein in those push back Federal Reserve rate cut expectations. Now, we've seen a really quite an aggressive repricing of when the Fed is expected to start cutting rates and how aggressively they'll be looking to cut rates. And that's boosted the US dollar. It's also pulled stocks lower. We had retail sales data out today from the US, which was stronger than expected. And that helped also sort of cast doubts over any early Federal Reserve rate cuts. So just having a look at the chart, we can see again, the US dollar, Japanese yen, it's risen sharply. It's taken out several key resistance points. It's taken out 200 SMA. It's taken out the 100 SMA at the moment, and it's rising towards that key 150 level. That will be the round number, psychological level that we'll be looking towards for buyers ahead of that 152, sort of just below that 152 level, which is where we start to get sort of, we had concerns over intervention previously. On the downside there, you know, be looking at the support level around the 146.45. So moving on, we've also got tomorrow ECB minutes, and also ECB President Christine Lagarde speaks. Now the minutes are actually quite stale if we think about it. You know, this is from a meeting which seemed to happen really quite a long time ago. I think perhaps what's being more relevant at the moment will be the ECB commentary that we're having from the World Economic Forum in Davos. We've had Christine Lagarde speak today. In fact, she said that interest rates are likely to or could be cut in the summer. Now, that's a little bit further back than what the market had been expecting. The market had been sort of pricing in potentially a March cut from the ECB. So, you know, investors are going to be watching those minutes closely for any concerns or any signs that there is perhaps a larger debate going on at the central bank. We do know that there can be quite big divides between the hawks and the doves at that central bank. So, you know, if the minutes are starting to show that there is a lot more debate going on about whether to cut interest rates, or debate at all about whether to cut interest rates, then that might pull the euro lower. But obviously, any of those further comments that, you know, it's too early to talk about rate cutting could support the the euro. Just having a look here at the chart again, this has been a picture, a story about US strength that we've seen. It's really seen quite an aggressive move lower, testing support as we speak of the 200 SMA. It's taken out that support, the early January low around the 108.80 level. As I said, testing the 200 SMA at 108.40. If we break down there, then we'll be looking at 107.50 as the next level. If that level, that 200 SMA does hold, then a rise above that 108.90-70 level will be key for the recovery of the pair. And then just finally, we've also got US data tomorrow. Housing, building permits, housing starts, and jobless claims. I think jobless claims are going to be very much in focus, just for further clues on the strength or the resilience of the US labor market, despite interest rates being at that 22-year high. Also got Fed speakers in focus. And again, it's going to be very much on the rhetoric. We've heard, in fact, Christopher Waller, for example, pushed back on Federal Reserve rate cut bets. He, you know, downplayed the need for an early rate cut, and that's been something that's really helped to support the US dollar. This is the gold chart that we're looking at now. I'm just showing this because gold is testing here a really key support level, that 109 level, which was the I believe it was the November high. It was, yeah, the November high. Now, if we see a breakdown of that level, then that could bring the 200 SMA at 1963 into focus. If the buyers manage to successfully defend that level, then they'll be looking for a move back up towards the 2055. I hope you've liked what you've seen, and if you have, then please remember to put a like at the end of this video. Also, if you would like to receive more content like this, then please remember to subscribe.